All right, let's dive straight into Forex today. We found this YouTube video, this trader, he goes by ICT, breaks down this EUR-USD trade, and get this, claims he called it, like beforehand.
And that's the thing, right? He's not just like, oh, look, it went up and down. He's showing you the why. Like, what was he seeing? What made him think it'd move that way?
Yeah, like he's got this secret playbook or something. So he starts talking about the dollar index, which I guess for anyone who's new to this, it's basically a measure of how strong the US dollar is compared to a bunch of other currencies.
Exactly. It's like a scorecard for the dollar. And ICT, he uses this to figure out the overall, what's the word, sentiment toward the dollar. So picture this, your ICT, it's the night before this trade. What's the first clue you see? He looks at the dollar index and, get this, predicts it's going to drop to, are you ready for it? 99.922.
Whoa, hold up. Not just like a nice round 100, but 99.92. That's crazy specific.
Right, and that's the whole point. He's not just like throwing darts here. He actually pulls up a chart from like the night before, and he had this level, 99.92, marked already. Like it wasn't some after the fact thing. He had it planned out. He talks about how he got there looking at old price moves, those patterns, the clues, almost like, I don't know, Sherlock Holmes with a candlestick chart or something.
He's not telling you what happened. He's showing you how he read the story before it even unfolded. Pretty cool.
Hmm.
But then he connects this dollar index prediction to the euro, right? That's the
Yeah.
aha moment.
Exactly. This is where it gets really interesting. He calls it like intermarket relationships. Basically, what he means is if he's right about the dollar, if the dollar index drops like he thinks, then the euro, it's going to go up. They're like opposite sides of the same coin, or like a seesaw, right? One goes down, the other has to rise.
Makes sense. So as that dollar index is going down, dipping towards his magic number, the 99.92, what happens? The euro starts rallying, right? It even breaks through this previous high point on the chart, which I'm guessing a lot of traders would see that and be like, gotta buy. This is it.
And that's the trap. ICT warns against just blindly following those breakouts. Why? Because he's got his eye on the bigger picture, right? That dollar index dance, he knows this whole euro rally could be short-lived. Remember, he's expecting the dollar to bounce back from that 99.92 level.
And guess what? The second that dollar index hits 99.92, boom, that euro, it reverses hard, like does a complete U-turn. He even shows how he traded it using this 2-minute chart talking about something called the fair value gap. Now, we don't have to get into the weeds there, but it just shows how much thought he puts into this.
Yeah, exactly. We don't want to get bogged down in the nitty-gritty of every single trade detail. The takeaway here is the power of like those market internals, those relationships between different markets. It's about seeing the clues in one place, the dollar, and using them to anticipate the move somewhere else, the euro in this case. That's next level stuff. So we've seen ICT in action, right? Predicting these euro moves based on what the dollar's doing. But how can you start thinking this way? How do you get inside his head a little bit?
Yeah. Right, because he's not just staring at that EUR-USD chart all day. He's got to be looking at other stuff, too. It's like he's got this whole detective kit for the market. So what's in the kit? What clues is he looking for?
Well, you remember how he uses that dollar index, right? That's like public enemy number one in the market internals file. It's the heartbeat of the US dollar, basically.
Okay, so it's like checking the patient's pulse before you make a diagnosis. Got it. But there's got to be more to it than just that, right?
Oh, yeah, for sure. It's not like one magic bullet, one indicator that tells you everything. It's more like putting together a puzzle. You got the dollar index, you got price action, those patterns and shapes on the chart we talked about. But then there's stuff like order flow, too, which can give you some hints about what the big players are up to.
Order flow, huh? Okay, now you're just using fancy words to sound smart. Break that down for me. What is that?
Basically, instead of just seeing that the price is moving, you're trying to see who's doing the moving. Imagine, like, an auction, right? You see the price of this painting going up and up, that's price action. But order flow, that's like being able to see who's actually placing the bids, how aggressive they are, if it's like a bidding war or just one person quietly buying up everything.
Ah, so he's trying to spot the whales, the big fish in the pond making waves.
Exactly. He believes he can see the footprints of those big players, institutions, hedge funds, the ones moving the real money. And that, my friend, is valuable info.
It's like he's got a map to where the treasure's buried, but instead of gold, it's like market insights or something.
But hold on, he also mentioned order blocks, right? What are those all about? Good catch. Think of order blocks, like footprints, but giant footprints. ICT thinks he can see where these big institutions are placing their bets, and that's huge because they've got so much buying and selling power, right? Those order blocks, they can act kind of like support and resistance levels, like walls the price bounces off of.
Okay, so he's got his market detective hat on, looking for those big footprints, those order blocks. But then he ties it all together with those intermarket relationships, right? That
Mhm.
whole idea of different markets moving in sync.
Exactly. It's not enough to know one market's going up or down. You got to see how the others are reacting, see if they're playing along. It's like a dance. He's not just looking at one dancer, he's watching how they all move together, the whole choreography.
And that takes some serious knowledge, right? To be able to connect all those dots, see how the euro and the dollar and everything else, how they all fit together.
No doubt. This isn't something you learn overnight. It takes time, experience. But the point is, it is possible. You don't have to be some Wall Street hotshot to start thinking about the markets this way.
It's more about asking the right questions, being curious, like, why is this moving? What else is going on?
Exactly.
I love that he tells people to go back and, like, fact check him. He's like, go back to this date and time. Was I right? He's practically begging for it.
That's the sign of a good teacher right there.
Yeah.
He's not afraid to be wrong. He wants you to see the process, not just like blindly follow his every word.
It's about empowering yourself, learning to read the market for yourself so you can make your own decisions. But that brings up a whole other challenge, doesn't it?
What's that?
Well, we've talked about all these things ICT looks at, but there's also a ton of noise out there, right?
Mhm.
Like, how do you filter out what's important and what's just going to distract you? It's a jungle out there. We've got charts, news feeds, every financial guru on Twitter telling you what to do. It's easy to get analysis paralysis. So how does ICT deal with all that noise?
He actually uses a really interesting word for it. He says it's about being zen, having a plan, sticking to it, not getting rattled by every little market hiccup. Like imagine the Forex market's this bucking bronco, right? You got to hold on tight, trust your training, and not get thrown off.
So no more checking your phone every 5 seconds, freaking out about every little red or green candle on the chart. Easier said than done, right?
Totally. Especially these days, everyone wants you glued to the screen, right? It's like this constant fear of missing out. But ICT, he says it's a trap. Don't get sucked into the herd mentality, following the crowd, panicking when they panic. Think for yourself.
Be your own analyst, your own trader.
Yeah.
But how do you build that confidence, that trust in your own judgment? I mean, it seems like every other day there's a new expert with a different opinion.
Yeah, and he gets that. He's not saying he's got it all figured out, that his way is the only way. He actually encourages people to experiment. Find what works for them. He even says, like, take what I teach you, twist it up, make it your own.
I love that. It's not about blindly following someone else's playbook. It's about learning the fundamentals and then developing your own style, your own edge. But there are some things he's pretty strict about, right? Like that whole risk management piece. He keeps hammering that home.
Oh, absolutely. That's non-negotiable for him. Protecting your capital, your bankroll, that's priority number one. He's like, even if you get the market direction right, if you don't manage your risk, one bad trade can wipe you out.
It's like they say, you can be right and still lose money. So it's not just about picking the right direction. It's about position sizing, managing your risk. It's a different way of thinking about it. Not just will it go up or down, but how much can I afford to lose if I'm wrong?
Exactly. And that's what makes this whole deep dive so insightful. We're not just talking about a single trade or even just ICT-specific methods. It's a whole philosophy of trading, a way to look at the markets that puts analysis, risk management, thinking for yourself. Those are at the forefront.
He had this one line really stuck with me. Don't just be a trader, be a student of the market. That's got to be your mantra, right? Never stop learning, especially in the Forex world. Things change so fast.
It's a journey, not a destination for sure. Always learning, adapting, trying to get a little bit better every day.
So as we wrap things up here, I'm curious, what about this resonated most with you? What's that one thing you're going to take away from this deep dive, maybe explore a little further on your own?
Because in the end, right, the most valuable knowledge is the kind we actually use, the kind we put into action. So take what you've learned here, think about it critically, maybe even give that ICT video another watch with fresh eyes, and see how it fits into your own trading journey.